Hello and welcome to my Trading 212 Stocks and Shares ISA portfolio update for August 2024. The performance of my portfolios reflected the general rollercoaster we've had in the markets in August, with the big market dip at the start of the month, the quick recovery, but then in the second half of August we had the strengthening of the pound against the dollar, which has taken away some of the recovery for us as UK investors. However, I won't repeat myself too much from my Invest Engine video and we'll jump straight into my Trading 212 update. I've made a number of contributions and changes to the portfolio that I'm excited to share. As a quick reminder, last year I was using the Trading 212 Invest account because you could only contribute to one Stocks and Shares ISA per tax year. However, with the ISA rules having changed in the new tax year, I took the opportunity to move most of my investments from the Invest account and open a Trading 212 ISA. As a result of this rule change, I've been contributing to Stocks and Shares ISAs on both Invest Engine and Trading 212 in the same tax year. I have decided to prioritise Trading 212 ISA contributions though, and that is simply because I qualified for the 1% cashback promotion on all ISA deposits, so it made much more sense to make the most of that. I've now deposited a total of £13,500 in my Trading 212 Stocks and Shares ISA this tax year, and that means I've received £135 in cashback. When you combine these deposits with my deposits to Invest Engine and my lifetime ISA on Hargreaves Lansdown, I've now actually utilised my full £20,000 tax year allowance. This is not the norm for me, but it is because I had a big head start when I moved my investments from the Trading 212 Invest account to the ISA account, as well as maxing out my lifetime ISA early on due to an upcoming house purchase. I'll have a think about what to do next, but with my ISA allowance now utilised, perhaps I'll contribute to my Invest account or perhaps a SIP, depending on how my income turns out this tax year. First of all, I'll go through the dividends that I've received this month and the position I've sold. I received 2 dividends in August, but both from Bloomsbury. The total was £28.06. The reason why it's split into 2 is because I hold Bloomsbury in both my ISA and Invest accounts. The ISA dividend was £16.49 and the Invest account dividend was £11.57. This was a very nice dividend to receive from perhaps my favourite stock at the moment. As I'll show in the position update, Bloomsbury continues to hold strong and do very well for me. In terms of what I've sold, I've actually sold the Wisdom Tree UK Quality Dividend Growth ETF, ticker UGRW, for a total of £1,234.80. My total return, including dividends from UGRW, therefore works out to be £43.85. Nothing incredible, but not too bad considering how long I held it for. Now you may be wondering why I sold this ETF, given how I think it is probably the best ETF for investing in UK stocks. And to be honest, I do still think that. It's a great ETF and perhaps I should not have sold it. But I did so simply because when the market dipped on the 5th of April, UGRW dropped by much less than JGGI. So I wanted to take the opportunity to top up my JGGI position by as much as possible. And selling UGRW gave me the free cash that allowed me to do that. Reducing my number of positions also helps me in my gradual goal of simplifying my portfolios. Turning to the Trading 212 page now, before going through the ISA, let's have a quick look at how Bloomsbury Publishing is doing here in the Invest account. I've bought roughly another 3 shares this month using both the cashback and the dividend, bringing my total to about 109 shares. Looking at the 1 month chart of BMY, it does reveal it is down by 4%, but this is a bit of a distortion of its overall performance due to it coming off a very brief and high peak, and in general the performance of Bloomsbury remains very strong. Scrolling down, we can see I now have an unrealised return of £180.52 or 30.2%. If you are interested in researching BMY, I will leave a link to this research paper by H2 Radnor, which will give you a lot of information to go off and an investment case. Of course, always do further research. Switching over to the ISA account now, firstly, on the overall return chart, we can see how bumpy this month has been. You can see my top-ups during the crash to buy the dip, so to speak, and how my unrealised profit loss went from minus £800 on the 5th of August to a couple of £100 in the green by mid-August, before coming down a little bit at the end. Considering how the month started, it has ended up okay, and to be honest, whilst others were panicking, I was happy to get a good opportunity to top up some of my positions. Anyway, moving on to the holdings run through, you'll see that the first stock in the ISA is Bloomsbury Publishing as well. I've not purchased any additional shares and I still own 150 shares in the ISA. I reinvested the dividend from this stock into JGGI. My return for BMY is currently plus £252 or 30.77%, so no complaints at all here. Up next in the portfolio is Games Workshop, ticker GAW, the manufacturer of miniature war games and owner of the Warhammer IP. GAW is up by 1.55% over the past month, but as with most stocks, you can see that strong recovery over the course of the month. Scrolling down, we can see that my holding is still 11 shares and my unrealised return is £77.25 or 7.2%. We can also see that Games Workshop did go ex-dividend on the 8th of August for £1 per share, so resultingly I can expect a payment of £11 on the 16th of September. Jet2 is the next stock in the portfolio, the well-known travel and leisure company. Over the past month it is up by 3.87%, and this means, looking at my position, that I'm in the green now by £32.72 or 3.53%. This stock does go ex-dividend on the 19th of September for 11p per share, and based on my holding of 65 shares, I can expect a payment of £7.15. Next up in the portfolio is JP Morgan Global Growth and Income, ticker JGGI. On the 1 month chart, you can see that big dip this trust had early on, as it does have significant holdings in those tech stocks that saw the brunt of the dip. It has recovered quickly, but recently, as a result of the strengthening pound I guess, it has come down again a little bit and ended the month down by 2.3%. Scrolling down, you can actually see that I've been making the most of that JGGI dip, and I've topped up my position quite significantly by plus 325 shares to a total of 1,083 shares. My return for JGGI is plus £33.91 or 0.57%. This is still quite a new position in the portfolio, and I'm building it up because it basically acts as the global core fund in this portfolio, even though it is actively managed, so I guess in my overall portfolio, including Invest Engine, it could also be arguably seen as an oversized satellite position. If we scroll a little bit further down, we can see that I'll receive my next dividend of 6p per share on the 7th of October 2024, and based on the number of shares I hold, I can expect a chunky payment of £64.98. Really looking forward to receiving that one. Rightmove is the next stock in the portfolio, and it has the ticker RMV. It is down from the start of the month by 3.58%. I haven't added to this holding, and I still own 120 shares with an average purchase price of 536.5p, and my unrealised return is now plus £22.88 or 3.55%. The next holding in the portfolio is SPDR MSCI USA Small Cap Value Weighted ETF, with the ticker USSC. This is down by 1.71% over the past month, and is another one which I topped up during the market dip. I've purchased an additional 7 shares, which brings my total investment up to 26 shares, with an average price of $61.79. You can also see the impact of the strengthening pound here, as I do have a negative FX impact of around 3%. However, even with this, overall I'm up by 5.53%. Moving on, my next position is Wise, the fintech company. This stock is down by 1.67% on a 1 month chart, so no major movements, and it has basically recovered to where it was before. I have purchased an additional 20 shares this month, which brings my total position up to 280 shares, with an average purchase price of 756.7p. Overall, I am down by £146.19 or 6.9% so far. This is quite a large individual stock position, so I do admit this is quite risky, but I do like Wise as a company. I'm willing to take the risk, and I can see a case for a significant upside, hence the investment. Finally, my last position in the portfolio is YouGov, also known as the disaster of the portfolio. Saying that, it has had an okay month with it seeing a decent recovery, although some of those gains have been taken away in the second half of the month. Scrolling down, we can see my position is 105 shares, and I'm down by £337.30 or 39.16%. So it is a big negative drag on the overall portfolio, and what can I say really? The trading update was a huge disaster for shareholders, and as it is now a relatively small part of the portfolio, I'll just hold on and see how things pan out. So that was a run through of all my positions, and I'm now calculating my Trading 212 investment return to date. And as I always say, the homepage chart on Trading 212 is pretty useless for total returns. To be clear, this is a sum of the gains from both my Invest account and new ISA account. Most of these gains are from the Invest account, as the ISA was only started this tax year. To get an accurate return figure, I add together the unrealised gains from the charts, the realised gains, dividends received, and interest earned. I also take away investment costs, which is mostly made up of stamp duty paid on the purchase of UK shares, which is starting to be quite painful now, and FX fees charged by Trading 212 when purchasing stocks that trade in a different currency. Adding all those sources of return together and taking away the costs gives me a net investment return of £1,105.44, which is about £100 down from last month, but not too bad at all considering everything that has happened in August. And by using Excel to calculate my money weighted rate of return, return, which takes into account when money was deposited or withdrawn, I get a return figure of 13.79%. To finish the update, I'll just quickly show the overall allocation of the portfolio and how it currently stands. This is for the ISA and not including Invest, as Trading 212 does not show that total allocation unfortunately. You can see that, as intended, JGGI makes up the bulk of my portfolio at around 44%. And then another 10% is in the US small cap ETF. The remainder is in individual stocks, with Wise, Games Workshop and Bloomsbury being my largest individual positions. I am slowly working towards my goal of having only 10% of my overall portfolio, including Invest Engine, in individual stocks, as I'm fully aware of my own stock picking ability, and whilst I do find stock picking fun, I strongly believe that for most people, me included, collective investment vehicles, both ETFs and investment trusts, are the way to go. That is it for this video. I'm really excited to see what September has in store for us. Let me know how your portfolio's been doing in the comments below, and if you have enjoyed the video, please do consider leaving a like, and I'll see you in the next one. As always, thank you for watching.